Good morning. Good morning. Good morning. We were doing depreciation, but before that, we will do company accounts. We'll do some important questions from company accounts, which could be very important from your exam point of view. We'll spend this session mostly on company accounts, finish of depreciation, and if time permits, we'll also do sole proprietor during this session or inventors. We'll see how it goes. So, shall I start? Good morning. Yes, we are going to start with the company accounts issue of shares. I did debentures in the morning. We did all the important questions which could come for debentures in the morning, and we just went through bills of exchange in the morning session. And also we did the two questions from rectification of errors, which is pending, which I had given as homework yesterday. And also we did one question depreciation, just super say we did it. So, but now we will finish off depreciation. We'll go back to depreciation, but before that, we will do issue of shares. Yes, Varsha, please go on. What is the doubt? Yes, company accounts also. I will try to cover as much as I can in this limited time, but I will prioritize company accounts. We will do 1 to 2 hours of company accounts only. I'll solve the questions. I'll tell you how to solve it. I'll solve it for you in the class. So you also do it with me. Important questions these are. I have put three questions over here. All three are super important. Illustration 4. Okay. Okay, so this one, I'll solve it in the evening session. Remind me in the evening session, we will solve this. No problem. I can solve this. But in the evening session, it'll take some time. Remind me in the evening session. Okay. Now, coming back to the issue of shares, here the topics that I'm going to cover. One is oversubscription and pro rata allotment. I'm going to do that. There is one more type of questions which I'm not covering now, which is calls in arrears, calls in advance, interest, calls in arrears, interest on calls in advance. That one you have to solve on your own. But quickly, do you know what is the interest rate on calls in arrears as per table F? Interest on calls in arrears as per table F. So interest on call scenarios as per table F of the company, that is 10%, okay? 10% per annum. And interest on calls in advance as per table F of the company, that it is 12% per annum. So remember that 10% per annum is interest on calls in advance, calls in arrears interest rate is 10% per annum, and calls in advance interest rate is 12% per annum. So remember that. And yeah, now we are going to do pro rata allotment. And how do we deal with that? And later on, I'll also come to yes. Okay, fine. I'll also do a couple of questions of forfeiture and reissue. This question is very good. So we will do this question as well later. First, we will start with a pro rata allotment question, classic question for 15 marks. So has come for your exams multiple times, not once, not it's come many times. and it's still important for your attempt also. This question is very, very important. Okay, let's read the question once. I hope all of you have joined. If your friends haven't joined, please tell them to join the session because we're going to do company accounts. We're going to do these two questions. The most popular doubts that people ask is generally out of this question. So do tell your friends if anyone hasn't joined to join the session, and we will do it together. We'll finish off some important portions now. Okay. Piyush Limited is a company with an authorized share capital of 2 crores in equity shares of rupees 10 each, of which 15 lakh shares had been issued and fully paid on 30th June 2018. The company proposed to make a further issue of 1,30,000 shares of rupees 10 each at a price of 12 rupees each. The arrangements for payment being rupees 2 per share payable on application to be received by 1st July 2018, allotment to be made on 10th July 2018, and a further rupees 5 per share including the premium to be payable. Then the final call for the balance to be made and the money received by 30th April 2019. So, what are they saying over here? There is the issue of shares. First two sentences are not so useful. Authorized capital is 2 crores. Okay, that's fine. In equity shares of rupees 10 each, of which 15 lakh shares had already been issued. That is also not useful now. What is useful is this. The company proposed to make a further issue of 1,30,000 shares of rupees 10 each at a price of 12 per share. The arrangements for payment being as follows. So they have given the arrangements 2 per share on application, allotment as 5 per share. So just draw the chart. The issue price is 12. The face value is 10. That means there's a 2 rupee premium. Okay. So 12 rupees. The face value is 10. The premium is 2. And the issue price is 12. What have they said next? They have said there is application, allotment, and final call. There are three limbs to this chart. In three installments, we're collecting the money: application, allotment, and call. So, application, we have to see how much is received towards face value. Total will be 10, premium will be 2, and total issue price that will be collected will be equal to 12. Okay. Now, 2 per share on application, they have said no premium there. So everything is towards the face value. Next, allotment 5 per share, including 2 rupees premium. So here, including the premium. So the premium is included at allotment stage. So total 5 rupees is being collected. In that 2 rupees is towards premium. Then remaining 3 rupees will be towards the face value of the share. So you should always write this chart ulta, okay? You have to first write the issue price minus the premium and then write the face value. Always ulta, not up. Don't write 5 over here. Don't write towards face value. No. 5 rupees is including the premium. So you have to write it towards issue price, then premium, then the face value, the remaining. Final call for the balance. So you have to calculate what the balance is. The balancing figure will be 12 minus 5 minus 2, which is 5 rupees. No premium. Premium has already been collected. This will be 5 rupees. So the chart is ready. Okay. Next. Applications were received for 4,20,000 shares and were dealt with as follows. Now, if you remember in the question initially, they had said, how many shares are we issuing? We are issuing 1,30,000 shares. Now, the applications have been received for 4,20,000 shares. So it is oversubscription. So the shares have been oversubscribed. We were offering only 1,30,000 shares, but we have received applications for 4,20,000 shares. So there's an oversubscription. So now in this case, we will have to either reject some applications right away, or we will have to do a pro rata allotment. So pro rata allotment means we have to create a proportion, and in that proportion only we have to issue the shares. Applicants for 20,000 shares received allotment in full. So this is the first category. They are receiving all the shares, how much ever they have applied for. They are receiving all the shares that they have applied for 20,000, 20,000. No excess over there. Applicants for 1 lakh shares received an allotment of one share for every two applied for. So the second category, they have applied for 1 lakh shares, received an allotment of one share for every two applied for. So here, what are they saying? So here they are saying that applicants of 1 lakh shares received an allotment of one share. So they are receiving one share allotment for every two applied for. So if you apply for two shares, you will get one. How many shares have they applied totally? They have applied totally 1 lakh shares. So for 1 lakh shares, they have applied. Now we have to do a cross multiplication and find out how much have we allotted. So it is 1 lakh into 1 divided by 2. So you will get 50,000 shares. So we have allotted for this second category, we have allotted only 50,000 shares, although they have applied for 1 lakh shares, but we're giving them only 50,000 shares. Now there's a situation here. What is the situation? The situation is, sir, they had paid application money of 2 rupees. 2 rupees was the application money on 1 lakh shares. So 2 rupees into 1 lakh, 2 lakh, right? They had paid 2 lakh. Put 2 lakh on your calculator. Now, we allotted them only 50,000 shares. So, how much application money should they have had actually paid? What is the company that can, how much is that amount that the company can actually retain? Can we keep all of this 2 lakh rupees towards application? Have we given them 1 lakh shares? We haven't given them 1 lakh shares. So, we don't deserve to keep all of this 2 lakh rupees, right? 2 rupees into 1 lakh shares. We can't keep all of that 2 lakh rupees. The company can keep only 50,000 into 2 rupees versus 1 lakh. So the company can keep 1 lakh. So that means this is an extra of how much? Extra of 1 lakh rupees, excess. So generally what happens is, in the case of pro rata allotment, the shareholders, the share applications have not been completely rejected, right? So we don't reject. We have given them some shares. So what the company does is, the company does not refund that money right away. The company might adjust that money, that extra money, whatever is there, with the further stages, especially allotment stage, which is due immediately after application on that same date. Even the allotment money becomes due. So the company adjusts that with the allotment money. So that is what they're saying over here. So what have they said over here? The surplus on application. This is that excess. 1 lakh rupees extra was there. No, being used to reduce the amount due on allotment. So the company is retaining that money and they are using it to reduce the money due on allotment. So these shareholders don't have to pay the whole allotment money. So whatever 5 rupees into 50,000 they had to pay 2,50,000. They don't have to pay the whole amount. We have that extra 1 lakh. We will adjust it. We will adjust the surplus on application against the allotment. That is what this question is saying. C point, the applicants with 3 lakh shares, this is the third category, the next category. Applicants with 3 lakh shares received an allotment of one share for every 5 shares applied for. The money due on allotment was retained by the company, the excess being returned to the applicants. Very simple. So this third category, they applied for 3 lakh shares. Here we are giving one share for every 5 applied for. One share for every 5 applied for. So the same cross multiplication, one share is allotted for 5 applied. They have applied for 3 lakh shares. So we have to do a cross multiplication. 3 lakh into 1 divided by 5. How much will you get it as? 60,000, right? So we are issuing 60,000 shares for these guys. Fine, sir. That's it. Now, from them also, we have received something extra. They have also paid more money, 3 lakh shares ka money they have paid, although they are getting only 60,000 shares. So they have paid 3 lakh shares ka money, application money. So there is some extra money over here also. So now, in this case, what will we do with that extra money? Let's read. The money due on allotment was retained by the company. So whatever that extra money is there towards allotment, how much ever is required, it is retained by the company. The excess being returned to the applicants. Whatever extra money is there, that is given back to the applicants. After adjusting with allotment, whatever is left, right, that will be given back to the applicants is what they are saying. Fine. Now, the money due on final call was received on the due date. You're required to record these transactions, including the cash items, in the journal of Piyush Limited. Now, before we start with the journal, one very important working note is the calculation of that adjustment. How much is adjusted? How much is refunded? All of that adjustment we have to do. For that, in the institute has a table. I also draw a very similar table, but one additional column, a little bit more explanatory. So we will draw that table. It will have totally 6 plus 4 columns. Okay, 10 columns it will have. Very easy table. You don't have to by heart anything. Just pay attention when I draw it. You also draw it with me. Totally, I'll need 10 columns for this table. You don't have to by heart it. You just pay attention when I'm doing it. So 6 plus 4 columns. 6 for excess calculation, 4 for excess adjustment. So we will see how that works. Now the first 10 columns you can draw. Okay. This is calculation of adjustment of surplus or excess. Now the column headings. So as I told you, there are 10 columns which you could split into 6 and 4 columns, right? In your mind, 6 columns is for calculation of excess. Very easy 6 columns. So first 6 columns are like this. Category. We're just trying to calculate how much extra they have paid. What is the amount of extra amount that we have received on application from them, right? That is being calculated. So category, then shares applied. How many shares have they applied for? Then you have to write shares allotted. How many shares have we given to them? Then amount received, application money received. From that, if you minus application money required, you will get the excess amount. So 6 columns are done. Very simple. I'm just trying to calculate how much extra we have received. Like we did in category 2. So in category 2, we calculated how much extra we have received. How did we calculate? We got that 1 lakh rupees. We said they have applied for 1 lakh shares. So on 1 lakh, how much application money they have paid? So they have paid 1 lakh into 2 rupees. 2 lakh. Minus how much is required? 50,000 into 2 rupees. 1 lakh. So 2 lakh minus 1 lakh. Extra is 1 lakh. So that calculation is done over here. Then we have to adjust that excess with allotment. So here they have told me in category 2 and category 3 there is excess, which will be adjusted against allotment. So we have to calculate how much is due on allotment. So for this, allotment money due. Allotment money due. Then whatever that excess is there, that will be adjusted against the allotment money. Excess money adjusted. And after this, you have to calculate how much is the allotment money that is received by us. So how to calculate this? Whatever the allotment money due is there, minus this excess money, whatever excess money you are adjusting now, right? So if you minus it, the remaining amount the shareholders have to pay you. So let's say, for example, they had to pay 10 lakh rupees. Allotment money due was 10 lakh. We have adjusted the application excess, whatever application excess was there. Let's say 2 lakh rupees application excess was there. So the remaining 8 lakhs they have to pay me. So that calculation is done over here. And then last one, refund. So if there is any extra excess, even after adjustment, there's something left. So that will be refunded back to them. We have to refund it. We will put the numbers and we'll calculate it. Okay. And also don't forget to give the column numbers because we have to do the journal, right? So column numbers are important. When we do the journal, we can just give references to this. For the category, you don't need a column number. For others, you need. Okay. Now, category 1, the first category. How many shares did they apply for? They applied for 20,000 shares. How many shares are we allotting to them? We are allotting all 20,000 shares. Allotment in full. How much my application money have we received from them? 2 rupees is per share. Per share application, it is 2 rupees. Into 20,000 shares they have applied. So 40,000 rupees we have received from them. Then the application money required from them. So how many shares have we allotted to them? Full 20,000 we have allotted to them. So we required 40,000 rupees from them. We need full 40,000 from them. Sir, have you received anything extra? Is there any excess over here? The answer is no, it's nil. 40,000 was required. We have received also 40,000 only. There is no extra. Allotment money due. Very simple. 5 rupees is the allotment money per share. How many shares have we allotted to them? We have allotted 20,000 shares to them. So 20,000 into 5 rupees. 1 lakh. 1 lakh is the allotment money due from them. Excess application money. Is there any excess money to be adjusted over here? No, we don't have anything excess. So nothing. No excess only to adjust, right? Excess is the adjust matter. So there's no excess over here. So how much allotment money do we end up receiving? We end up receiving the whole allotment money of 1 lakh rupees. Do we have to refund anything? No. Only if there is any excess, we will refund it. This is excess refund. Basically, there is no excess itself. So there's no point of refund. Category 2, I can write like this. How many shares have they applied for? They have applied for 1 lakh shares. How many shares am I allotting to them? 1 lakh shares received an allotment of 1 share for every 2 applied for. So we are allotting 50,000 shares to them. So application money received from them is 1 lakh into 2 rupees. Two lakh we have received from them. How much is required from them? 50,000 into 2 rupees. 1 lakh is required from them. How much is the extra money? Excess amount is how much? Application excess is 1 lakh. Fine. Allotment money due. How much is the allotment money due from these shareholders? 5 rupees per share. And how many shares have we allotted to them? We have allotted 50,000 shares to them, right? So you have to multiply 5 rupees into 50,000. So 2,50,000 is the allotment money due. Now look at this. We have an excess of 1 lakh. 1 lakh excess is there, which will be adjusted against allotment. So full 1 lakh is being adjusted. So 1 lakh is adjusted against 2,50,000. Now, allotment money 2,50,000 was required. In that, we have adjusted excess. We have used the application excess 1 lakh. So how much money is received at allotment stage? The balance. How much is the balance? 1,50,000. We will receive this 1,50,000. So do we have to refund anything extra? There was extra of 1 lakh rupees. Should I refund that 1 lakh rupee extra? The answer is no. I'm not going to refund that extra. Why won't I refund that extra? Because I have used it to reduce the allotment money, right? He had to pay me at allotment stage. I've told him 2.5 lakh he had to pay actually. But we are saying don't pay 2.5 lakh. Your application excess is there. We will adjust it over here and remaining 1.5 lakhs you pay. So that is what we have told. So that is why no refund. That 1 lakh rupees has been used to adjust against the allotment money. Now, category 3, very important category. See what's happening with them. So they have applied for 3 lakh shares. So 3 lakh shares. We have allotted them 1 share for every 5 shares. We did the calculation, no, 1 share for every 5. So we have allotted them 60,000 shares. Application money received from them is 3 lakh into 2 rupees. It's a 6 lakh rupees. Application money required from them is 60,000 shares were allotted into 2 rupees. 1,20,000 rupees is required from them at application stage. So do we have anything extra? Yes, sir. There is an extra 6 lakh minus 1,20,000. 4,80,000 extra is there. 4,80,000 excess money is there. Now, what are we going to do with this? Am I going to refund this directly to these shareholders? The answer is no. We are now going to refund this as well. We're going to adjust this against allotment. So let's calculate how much is the allotment money due. 5 rupees per share into how many shares we allotted to them? 60,000 shares we have allotted. So 3 lakhs. 5 rupees into 60,000. Now, how much excess should I adjust? There's total excess of 4,80,000. At allotment, we need only 3 lakh. At allotment, we need only 3 lakh, but we have an excess of 4,80,000. So should I adjust all of this 4,80,000 over here? No. It's always 5 or 6, whichever is lower. Okay. Column number 5 or column number 6, whichever is lower for adjustment. For this, it's 5 or 6, whichever is lower. Remember it like that. So now we will adjust only 3 lakh rupees over here. 3 lakh rupees we have adjusted. We're now going to adjust all of 4,80,000. That's column number 5 or 6, whichever is lower you have to write. So allotment money received will be allotment money due minus adjustment. So 3 lakh was due. In that 3 lakh we have adjusted the excess we have used to adjust. So we are not going to receive anything over here. No money is going to be received over here. Excess refund. How much will we refund? So total excess was 4,80,000. In this, we have used 3 lakh for adjustment. So this is nothing but 5 minus 6. 5 minus 7. So total excess was 480. The 3 lakh has been adjusted. So the remaining 1,80,000 will be refund. Oh, that's it. Very simple table. Now, total it up. We will do the whole journal on the basis of these totals itself. So the totals are very important. How many shares have they applied for? 4,20,000 was given in the question directly. How many shares are we allotting? 1,30,000. This was also given in the question directly. Application money received. It's nothing but you can total it up, but I'm telling you the shortcuts to do it. So 4,20,000 into 2 rupees. Total 4,20,000 applications were received into 2 rupees, 8,40,000. Shares allotted. How many shares have we allotted? 1,30,000. And how much is money required? You have to multiply that with 2 rupees. Share allotted into 2 rupees. So it is 2,60,000. This much is required. 8,40,000 minus 2,60,000. This is the excess amount. How much is the excess amount? 5,80,000. allotment money due. Allotment money due, you have to see the number of shares allotted 1,30,000 into 5 rupees. 6,50,000. Excess amount adjusted, this you have to total 4 lakhs. One column, you can't do it directly, it's not given directly, you have to total it. Others, everything you can do. Allotment money received is 6,50,000 minus 4 lakh. 2,50,000. Excess refund is total excess 5,80,000 minus excess adjustment, which is 4 lakh, 1,80,000. Done. We are ready with the table. The table is ready. Now we have to do the journal. Let's do the journal. Journal entries. In the books of Piyush Limited. Okay. Now, first let's receive the application money. The calculations are already done. So you just have to see these amounts. The dates you see, when did we application was received to be received by 1st July. So 1/7/2018. Bank account debit. To equity share application. Account. So we have received total 8,40,000. This is column 3. P, application money received. Next, we have to adjust this with allotment, and we have to transfer this to capital, and also there's some amount to be adjusted against allotment and all of that. So that's why we have to be careful about this entry. Okay, this entry is the second entry is the most important entry in this whole problem. That's why we did that working note. The working note was done to accommodate or to solve to give the second entry, which I'm going to pass now, right? So for that we did the whole table. So now the date will be the allotment date. Remember, this entry is passed on the allotment date. So this date you have to take. Application, you receive the money on 1st July. By 1st July, you receive all the money, but transfer allotting of shares happens on the allotment date. So on that date only, you have to pass the second entry, which is 10th of July. 2018. So equity share application account, debit, 8,40,000. Very important entry, pay attention. Whatever this amount was there, I have debited that account now to equity share capital. So how much is required at application stage? Only that is transferred to capital. Now here there's no premium. At application stage, there is no premium. So everything will be transferred to the capital itself. So we'll transfer it to the capital. To equity share capital. Column number 4. 2,60,000. So if there was anything required towards premium, then that much portion would have to be transferred to the security premium account. But in this case, everything is towards the face value itself. The whole of 2,60,000, whatever was required at application stage, everything was towards the face value. So I am crediting the equity share capital account. What about the excess? There's an extra, no? There's an extra 5,80,000. What do we do with that 5,80,000 extra excess? We use some of it to adjust against allotment. We have adjusted 4 lakh towards allotment, and remaining 1,80,000 I have refunded. So the extra, how did we deal with that extra 5,80,000? 4 lakh was adjusted against allotment, and the remaining 1,80,000 was refunded back. So that we have to do over here now. So to equity share allotment account, we will pass this. I mean, we will open the share allotment account, and the next entry we will debit it. And on the same date, on 10th July only, allotment money is due, right? So we will debit it immediately later. Now we will, don't put it in calls in advance and all. It is not calls in advance, or is due on the same date. The share allotment money. 4 lakh. This we have in column number 7. And finally, to bank account. We're going to refund the balance. How much is the balance? Column number 9. The last column we've calculated how much to refund. No, 1,80,000. So this is our entry. This is the most important entry in the whole problem. Being application money transferred to share capital and application excess partly adjusted towards allotment and balance refunded. And balance refunded. Have you all followed this? Have you all understood this? Okay. Next, what happens? Next, allotment money, due entry for allotment. Now, remember, there is security premium, okay? There is premium at allotment stage. So, while you're passing the due entry, be careful. Equity share allotment account debit. So, total 5 rupees on 1,30,000 shares, right? 6,50,000 is due to equity share capital. How much is towards the face value? 3 rupees, no? 3 into 1,30,000, which is 3,90,000. To securities premium, ₹2 into 1,30,000. 2,60,000. Am I going to receive this all of 6,50,000? The answer is no. We have already adjusted some money. How much allotment money are we going to receive? We have already calculated that in the table itself. So in the table only we have calculated we're going to receive 2,50,000 allotment money. So receive that amount. Same date. Bank account debit to equity share allotment account. How much am I going to receive? I'm going to receive 2,50,000. Over. Now, last call money due entry and call money receipt entry. That's all. The money due on call was received on the due date. So you would pass the due entry and on 30th April 2019 and receive it. 34, right? Equity share, final call account debit. Equity share, final call account debit. We have to receive 5 rupees on 1,30,000 shares, which is 6,50,000 to equity share capital, which is 6,50,000. Next, you have to receive that amount. What is the entry to receive that amount? Bank account debit, equity share, final, over. That's it, guys. It's not hard. It's very easy. It's very, very easy. If you get this, you're lucky. You get this for your exams, right? Pray that you get it. Just this table you have to focus on. And then the journal entries are simple. Even in the latest exam, something similar was asked. And in that question, in fact, three categories was not there, just two categories were there. And the last, that fellow, one person does not pay the final call money. And then the cancellation of shares was also there. That's all. Cancellation and reissue was there. It was an easy question. It was a similar question. Asked for 15 marks. In fact, the table was smaller. It had only two columns, two rows. Here we had three rows, right? Three classes, three categories were there. In that latest exam question, only two rows were there. So, and also there was last, this money was not received. This final call money was not fully received. One person did not pay, so his shares were cancelled. So just an extension, a little bit more was there. It was very easy. If you knew how to do this question, it was doable. So you may get again a similar question in this exam also, probably without reissue, without cancellation, not a three category, four category question. Have we followed it? Any doubts? Any questions? We finished it in around 35 to 40 minutes with explanation. So you can finish it faster, the exams, which is very good. So you should spend, it's actually a little time consuming, but 15 minutes question on an average, according to me, you have to spend somewhere around 25 minutes. But these questions will take a little bit more time. So around 30 minutes you can schedule for this and you should be able to do it. Of course, you have to write the narrations there. I did not write the narrations. Okay, now next. For the four features for the reissue part, we have one more question. Bhagavati Limited invited applications for issuing 2 lakh shares, equity shares of rupees 10 each. The amounts were payable as follows. On application, 3 per share. On allotment, 5 per share. On first and final call, 2 per share. Applications were received for 3 lakh shares and pro rata allotment was made to all the applicants. Money overpaid on application was registered towards allotment. B, who was allotted 3,000 shares, failed to pay the first and final call money. His shares were forfeited. Out of the forfeited shares, 2,500 shares were reissued as fully paid up at rupees 6 per share. Pass the necessary journal entries to record the above transactions in the books of Bhagavati Limited. Simple question. This question is very easy. The next question is very good. We'll solve this question first. Okay, you don't have to draw the table and all. There are no categories. There's only one set of people directly. See, 2 lakh shares we had offered. We received applications for 3 lakh shares and we did a pro rata allotment. We made allotment to all the shareholders. Whatever extra money, excess money was there, application excess was there, that was adjusted against allotment. And B, who was allotted 3,000 shares, paid to pay the first and final call. So he's paid the allotment money. If he had failed to pay the allotment money, then the question would become interesting. Okay, why? We will do the next question and understand that. But here it is not, he's not failing to pay the allotment money, he's failing to pay the first and final call money. His shares were forfeited. Out of the forfeited shares, 2,500 shares were reissued as fully paid up at 6 per share. Pass the necessary journal entries to record the above transactions in the books of Bhagavati Limited. Let's do this question. So, journal entries in the books of Bhagavati Limited. Directly, I'm going to start with the journal entries itself. Bank account debit. Have they given the dates? No. Bank account debit. There's no premium and all, so the chart is not required here. Only I can see the numbers 352 it is. So we are receiving 3 rupees. How many applications am I receiving? I'm receiving 3 lakh applications. So rupees 3 into 3 lakhs, 3 lakh shares. So we are going to receive 9 lakh rupees in total. To equity of, yes, equity share application. Nine lakhs. Now, we don't need 9 lakhs at application stage. We are offering only 2 lakh shares, right? So 2 lakh into 3 rupees we need. 2 lakh into 3, that's 6 lakhs. So whatever that extra is there, how much extra is there? 9 lakh minus 6 lakh. 3 lakh extra is there. What do we do with the money overpaid on application? So the excess, overpaid means extra, whatever they have paid on application was adjusted towards allotment money. So we have to adjust that 3 lakh with the allotment money. Let's do it. Equity share application account debit. Nine lakhs to equity share capital account. Only face value is there, no problem of the premium over here. So 3 rupees into 2 lakh shares. I need only 2 lakh shares ka money. So 6 lakhs. So the extra, whatever the extra money we have received, that will be adjusted with allotment. So 2 equity share allotment. 3 lakhs. This is the excess amount. Now allotment due entry. Allotment 5 rupees into 2 lakh equity shares. So that's 10 lakhs. Is 5 into 2 lakh. 10 lakh. to equity share capital. This is the due entry 10 lakh. See now at the allotment stage, is anyone defaulting? That means is anyone not paying at the allotment stage? Uh, B, who was allotted 3,000 shares, failed to pay the first and final call money. So has he paid the allotment money? Yes. So there's no problem with the allotment stage. Okay, so that is a very important thing. Uh, I'll tell you how that changes the picture in the next question. You will understand why I'm highlighting it here. So now directly receive how much balance money we have to receive allotment. So out of 10 lakh, we have already adjusted 3 lakhs. So the balance 7 lakh has to be received. So we will receive that money. Bank account debit to equity share allotment. So 10 lakh minus 3 lakhs, 7 lakh. How did I get this? 10 lakh was the allotment money required that was due. In that we have already adjusted 3 lakhs. So the remaining 7 lakh is being received over here. 10 lakh minus 3 lakh, 7 lakh is being received over here. I hope you have understood this. Okay. Next due entry for first and final call. Equity share first and final call account debit to equity share capital. No premium again. ₹2 into 2 lakh shares. 4 lakhs. We have received the 4 lakh. We have to receive 4 lakh rupees at allotment at the final call stage. Now see how much we have received. So there is one adjustment here. No, we who was allotted 3,000 shares failed to pay the first and final call money. So on 3,000 shares, I'm not receiving the money. So on remaining 1,97,000 shares, 2 lakh shares are there totally. In that 3,000 shares paper, we are not receiving this final call money. So on everything else, we will receive. So we'll pass the entry to that. 3,94,000. I hope everyone has understood how I got this. Now, we have to go forward and cancel the shares. Sir, I have not opened call scenarios. You can also alternatively open call scenarios. If you're opening call scenarios, the entry will be bank account debit 3,94,000, call scenarios 6,000, two equity share first and final call 4 lakhs. You can close that first and final call account by opening the call scenarios. Okay, alternative solution, not compulsorily required. Only if they give in the question that the call scenario account is opened, then you have to compulsorily write it. Otherwise, not required. When it is given in the question, you can open up. I answered your question again. Now cancel these shares. The how many shares am I supposed to cancel? 3,000 shares I'm supposed to cancel. Cancellation means I have to reverse the share capital. So equity share capital account. Equity share capital account debit. We are cancelling how many shares am I cancelling? 3,000 shares. What is the face value called up of these shares? It's fully called up shares, right? So rupees 10 into 3,000. The whole called up value will come over here because it's fully called up shares. 30,000. There's no premium, so no other debits. Directly go to the credits. Two, what stages have we not received the money? Equity share, first and final call. Sir, if you had opened the call scenarios in the earlier entry, here call scenarios account will come. This account will not come. Here, call scenarios. Instead of first and final call account, we will write call scenarios account over here. But here we have not opened the call scenarios. So this stage account will only come. 6,000. This is 2 rupees into 3,000 shares. We are not made the payment. No. 2. Whatever we have received, everything else we have received from him, we will credit it to shares forfeiture account or forfeited shares account, which is rupees 8. He has paid everything else. We received everything else from him. That will be 24. This number is important. This rupees 8, right? That's important. How did I get it? Out of 10 rupees, 2 rupees he has not paid. So he has paid all other 8 rupees. Although at allotment he did not pay full money, but we had taken some adjustment we had done. Application excess was adjusted against allotment, but he has paid everything, right? This is very important. In the next question, you will see how it will become very different. But now, I hope everyone has followed what we have calculated till here. I hope everyone has understood this much. Yes or no? Yes or no? Yes or no? Yes or no? So we have cancelled the shares. One more small thing. While I am reissuing these shares, okay, these shares can be reissued now. No, we have cancelled these shares. These 3,000 shares have been cancelled, forfeited. So now, if I want, I can reissue these shares. So when I'm reissuing these shares, the maximum discount I can give on the reissue should be limited to this 8 rupees. So whatever 8 rupees you see, it should be limited to this 8 rupees. So this is known as forfeiture gain. So whenever you're reissuing the forfeited shares, the discount amount must be limited to the forfeiture gain. So maximum discount I can give is 8. True or false question could be important. Okay, now let's reissue the shares. Are we reissuing all the 3,000 shares? No. See this. Out of the forfeited shares, 2,500 shares were reissued as fully paid up at 6 per share. So how much fully paid up means? 10 rupees. We are treating it as we are crediting share capital with 10 rupees, but we are going to receive only 6 rupees. So how much discount do we end up giving? What is the amount of discount we end up giving? We are treating it as fully paid up. That means 10 rupees. Fully paid up shares. But he's paying only 6 per share. So how much discount do we end up giving? We end up giving 4 rupee discount. Can we give 4 rupee discount? The answer is yes. We could have given a maximum of 8 rupees as discount, but we're giving only 4 rupees as discount, which is allowed. Are you guys there? No one's responding, no one's reacting. Are you all there? Are you all listening? So bank account debit. So rupees 6 he's paying into 2,500 shares. 15,000 rupees we're going to receive. Okay. Bank account debit 15,000 rupees. Then there's a discount. There's a discount of 4 rupees, which will be debited to forfeited shares income. So whatever reissue discount is there, that is debited to the forfeited shares account, which is 4 rupees. 10,000. To equity share capital. To equity share capital, it's fully paid up, right? So 25,000, 2,502, 10, full fees one, 25,000 rupees. Next, what am I supposed to do, sir? Next, we have to transfer money to the capital reserve relating to these 2,500 shares. We are supposed to transfer it to capital reserve. Let's transfer it to capital reserve. So only relating to the 2,500 shares, not all the shares. So from forfeited shares, account debit to capital reserve. Sir, we had learned a technique in PUC. Will that work over here? What is the technique we had learned in PUC? Sir, I have credited 24,000 to forfeited shares account. And after that, I debited 10,000. So the remaining 14,000, 24 minus 10, with remaining 14,000, I will transfer to capital reserve. This is what we had learned in PUC. Sir, can I follow the same technique over here as well? The answer is no, you cannot follow the same technique over here. Why can't I follow the same technique over here for this problem? That's because you're canceling 3,000 shares, okay? But you're issuing only 2,500 shares. No. So you can't do it like that. You can't transfer the balance directly. Rather, what you have to do is you have to calculate per share how much gain we have made and then multiply it with 2,500 and transfer. So now look at this. What is the gross gain, forfeiture gain? How much was our forfeiture gain? Our forfeiture gain was 8 rupees. While cancelling, we had said that we had received 8 rupees towards face value from that person. So 8 rupees was our forfeiture gain. So out of that 8 rupees, we used 4 rupees for discount, right? So we made a loss of 4 rupees. So how much is my net gain? So the forfeiture gain was 8 rupee per share. And now we gave a reissue discount of rupees 4 per share. So what is our net gain on these shares? How much net gain have we made? We have made a net gain of rupees 4 per share. Multiply this with number of shares reissued. Which is 2,500. So 4 rupees into 2,500, which is 10,000 rupees, should be transferred to capital reserve. The PUC technique, what you learned there, will work only when all the shares cancelled. Whatever shares I have cancelled, if I reissue everything, that time that technique will work. And you should use that technique also because it's a shortcut. But in this case, you can't do that because we have not reissued all the shares. Okay, you should know when to use it and when not to use it. So you can use it when all the shares have been reissued. If all the shares have been reissued, then do that. How much did we credit while forfeiting to the forfeited shares account? Take that, put that on your calculator, minus how much discount have we given, the balance transfer to capital reserve. That will work. When will that work? only when we have reissued all the forfeited shares. I hope I'm very clear there. Now, here we have not reissued all the forfeited shares. Out of the 3,000 cancelled shares, we have reissued only 2,500 shares. So therefore, we will have to do it like this. This calculation has to be done. You have to do it like this. There's no other way to do this. You have to do it like this. There are other ways, but stick to this. This is what the institute does. 8 rupees for feature gain. While cancelling, we had made 8 rupees per share. Again, if you had written the balancing figure in this entry, in the forfeiture entry, we have a habit of writing balancing figure for forfeited shares account. If you had written the balancing figure, then gone. You will not be able to do this calculation. So you should not write the balancing figure. You should write in the brackets. 8 rupees is the gain. 8 rupees is the face value received. So 8 rupees into 3,000. So you have to write it like that. So 8 rupees was the forfeited gain minus reissue discount was 4 rupees, while we reissued 4 rupee discount with given. So remaining 4 rupees is the net gain. So that is the gain that will be transferred to capital reserve relating to the 2,500 shares. So 2,500 shares you have to multiply, 10,000 rupees is to be transferred to capital reserve. Over. Very, very simple, very, very easy. This is all you have to do. That's it, right? We're done with this question. Any questions, any doubts, please ask. If you want me to repeat something, please ask. Anything? Or can I move ahead? Okay. Now we'll go to a very good question from one of the past exams. Been some time since this question was asked. Very good question though. Let's read it first and then we will try to solve it. We will solve it. X Limited invited applications for issuing 75,000 equity shares of rupees 10 each. Yes. This one. I think this one. Let's discuss this Mahidar. I think you're referring to something like this. X Limited invited applications for issuing 75,000 equity shares of rupees 10 each at a premium of 5 per share. So the issue price is going to be 15. The total amount is payable as follows. Rupees 9, including premium on application and allotment. So together. Yes, we're doing it. Balance on the first and final call. Okay, there are only two stages over here. Application and allotment is being collected together. Over here, 9 rupees, which will include the premium and the balance on first and final call. So the chart is very simple. 10 plus 5, 5 rupee premium is there. So 15 rupees is the total issue price. There are only two limbs. Application and allotment is together, which is 9 rupees they have said, which will include the premium of 5 rupees. So 4 rupees will be towards the face value and the balance 6 rupees will be towards the call. Fine. I hope everyone is fine with the chart. Now what happens? Applications for 3 lakh equity shares were received. Applications for 2 lakh shares, equity shares were rejected and the money was refunded. Fine. This is straightforward rejection out of the 3 lakh shares. 2 lakh applications were rejected right away. Shares were allotted on pro rata basis to the remaining applicants. The first and final call was made The amount was duly received except on 1,500 shares applied by Mr. Raj. His shares were forfeited. The forfeited shares were reissued at a discount of rupees 4 per share. Pass the necessary. When you go to that forfeiture, you will find a little hard. Let's do it. Let's do it. Let's not waste too much time. So first application money received, bank account debit. So 3 lakh into application and allotment money. Together we are collecting. No. So which is 9 rupees. 27 lakhs. To equity share, application and allotment account. 27 lakhs. Okay. Next, what do we do? We have to transfer this. Equity share application and allotment account debit. 27 lakhs. This will be transferred. Now, we will not transfer everything to capital. They have said 2 lakhs was rejected, right? So to bank account, I will give this back to bank account. So 2 lakhs into 9 rupees, 18 lakhs. Okay. So how many shares ka money we have retained with us? Out of the 3 lakhs, 2 lakh is rejected. So how many shares ka money we have retained with us? 1 lakh. But this is also over subscription. So 1 lakh shares ka money we have kept. But we are issuing only 75,000. So this is pro rata allotment. So 1 lakh shareholders ka money we have kept, but we are giving them only 75,000 shares. So this is also pro rata allotment. This is also over subscription. So you don't give 1 lakh shares. We're giving only 75,000 shares. So let's transfer money relating to 75,000 shares to the share capital, equity share capital. It's 4 rupees. 75,000 into 4, which will be how much? 3 lakhs. To securities premium. $75,000 into 5 rupees, which is 3,75,000, is it? What about the 25,000 shares ka money, sir? It will not tally now. There will be difference because this was 3 lakh into 9 rupees you had received. In that 2 lakhs ka you refunded. 75,000 ka you transferred to capital and premium. So 25,000 shares ka what happens? That we will adjust with the first and final call. So shares were allotted on pro rata basis to the remaining applicants. So therefore, it will be adjusted against equity share first and final call. You can transfer it to calls in advance and then transfer it to first and final call, or you can do it directly as well. So I'm going to do it. First and final call, the dates are not given. So generally what happens is you can directly write, they will give, if they wanted calls in advance, they would have given. They have not given, so I'll directly write over here. Equity share, first and final call. I'll tell you what happens if I had open calls in advance also, but this is fine. So 25,000 into 9 rupees. No, the remaining amount. 2,25,000. Now it should match. The debit must be equal to credit. I hope all of you have followed this, understood this. Yes. Now, next, what do we do? Now we call the equity share first and final call. We make the call. $75,000 shares into 6 rupees is the final call money, right? Four lakh 50,000. It's all towards face value to equity share capital, 4,50,000. Now we can't move ahead and just pass the entries forward. We have to do some calculations. We'll do some calculations. What calculations we have to do? See this. The first and final call was made. Fine. Till here we have passed the entries. We have made the equity share first and final call account. We have opened it. The amount was duly received except on 1,500 equity shares applied by Mr. Raj. Now, Raj is not paying on 1,500 equity shares, first and final call money. He's not paying, is what the question is saying. But see, Raj has already paid some amount towards first and final call. He's already paid some amount towards first and final call. How? Because he was one among those applicants. See, total 3 lakh shares were applications were received. In this, 2 lakhs was rejected. Listen, very important. Applications received was 3 lakh. In this, applications rejected was 2 lakh. So how many share applications did we retain? We retained 1 lakh share applications. Okay. For them, we gave 75,000. 75,000. So was Raj one among these guys? Was Raj also one among these guys? The answer is yes. He was also one among these guys. So how many shares did we allot to him? Or rather, the amount was duly received except on 1,500 equity shares applied by Mr. Raj. So Mr. Raj had applied for 1,500 shares. They have not said how much is allotted to Raj. We don't know how much is allotted to Raj. These many shares he had applied for. So you have to apply this proportion. 1 lakh share applications. For that, we gave 75,000. Same pro rata allotment. Proportionately, we had allotted. In that, Raj was among these 1 lakh. Among these 1 lakh shares, his shares were how much? 1,500 shares was Raj's shares. He had applied for 1,500 shares. So you have to calculate how many shares we have allotted to him. So how many shares have we allotted to him? 1,500 into 75,000 divided by 1 lakh. So we have given him 1,125. Remember, this was a question of pro rata allotment. This was not, we had not given, whatever they applied, we did not give them all the shares. This question was a pro rata allotment question. This question was about pro rata allotment. So out of the 1 lakh share applications that I had received, I gave only 75,000 shares to them. So this guy had applied for 1,500 shares. He had applied for 1,500 shares. He was not allotted 1,500. He had applied for 1,500. Are you understanding this? He had applied for 1,500 shares. So we have to calculate how many shares have we allotted to him. 1,500 shares applied by him. He had applied for 1,500 shares. So we have allotted him 1,125 shares. I calculated the proportion. It's 4:3 proportion actually. But anyway, you don't have to know that. You can directly do using this itself. I'll give you detailed working notes, but this is how I calculated. We have allotted him only 1,125 shares. Applied, allotted. Raj had applied for 1,500. We allotted him 1,125 shares. Now, I was telling you that although this question says that he has not paid the final call money, he did not pay the call money, but he had paid application money, and he had paid application money on 1,500 shares. The application and allotment money, right? He had paid on 1,500 shares, 1,500 into 9. He had paid 13,500 rupees. In this, we required, how much did we require? 1,125 into 9. We required only 10,125. So he has already paid something extra, 3,375 extra he would have paid. Are you getting what I'm saying? 3,375 extra he would have paid, which is towards final call only, which is towards the final call, which will be adjusted towards final call. That's how it works in priority allotment. So he has paid some final call money. He has already paid some final call money that we will calculate. And the remaining, whatever balance was there, he has not paid it. For that, we have to cancel. Okay. Let's do some working notes. Working note 1. Calculation of number of shares issued to Raj. Okay. So it was a pro rata allotment. So share applications received retained. We had received 3 lakhs, but we did not retain all the 3 lakh applications. We have rejected some outrightly. So we have retained only 3 lakh minus 2 lakh. 1 lakh share application we had kept. To these guys, shares allotted was how much? 75,000. Here only you can write. Raj had applied how much? This is total. Raj had applied how much? He had applied 1,500. We have to calculate how much are we allotting to him. You can also do ratio and all of that you can do, but this is straightforward. If you understand this is good, simple. So it is 1,125. One thousand one twenty-five shares were allotted to Mr. Raj. Okay. Now let's calculate how much money has he not paid towards first and final call. We have to calculate. No. So for that, we have to calculate that excess, how much excess we had received and how much we had adjusted against allotment and all we'll have to do. Calculation of excess adjusted against final call. You can draw the table, 10 column table. Institute does that in its solution sometimes. You can draw the whole 10 column table, but instead I will tell you straightforward. We can do it in the normal form, normal table form. So application money received from Raj. How much application money received from Raj? He had applied for how many shares? How many shares did Raj apply for? Did you all understand how I got 1125? I hope everyone is clear with 1125 calculation. There is no confusion there, right? All of you have understood how I got 1125. So it was pro rata allotment. So on that basis, we calculated. I hope everyone is absolutely clear about this. Okay. So application money received from Raj. How many shares did he apply for? He had applied for how many shares? He had applied for 1,500 shares. On 1,500 shares, what is the application money? Application and allotment money together, 9 rupees. So 1,500 into 9, which is 13,500. He had paid this much. But we needed how much? Application money required. We have allotted him only how many shares? 1125 shares. 1125 into 9. 10,125. So what is the excess money? 3,375. 3,375. Now, what are we going to do with this 3,375? We're going to adjust this against allotment. Okay, we're going to adjust this against allotment. So final call money due. How much is the final call money due? 1125 shares we had allotted into 6 rupees he had to pay towards final call. 6,750 was due. In this application excess, we will adjust over here, which is 3,375. This one, 3,375. Therefore, amount receivable on call from him is 3,375. This is also 3,375. So see, although they have said that he's not paying 6,750, he's not paying the final call. They said he's not paying final call. But he did not have to pay the whole of final call. He did not have to pay the whole of final call because he had already paid some amount extra on application. So that extra amount on application is adjusted against final call only, right? So he had paid already extra of 3,375. So final call money 6,750. In that 6,750, 3,375 we have already received as extra excess on application money, which will be adjusted over here. So the remaining 3,375 he had to pay, which he's not paying. That is the default. 3,375 is the amount which is not paying. I hope everyone has understood this. See here also, while we pass the entries, we have adjusted some money towards first and final call, 2,25,000. In fact, it was half, 50% of this amount. Whatever was due, 2,25,000, we had already adjusted. For all the shares, this was. For this guy, this one, 3,375. For this one person, 1,500 shares per person. So 3,375, we have not received. Now let's cancel the shares. We have the relevant numbers now. Before we cancel the shares, let's receive the money. So let's receive the money. Bank account debit. Look at this, sir. I don't have to receive all of the 4,50,000. 4,50,000 is due, yes. But in that 4,50,000, we have already adjusted 2,25,000. We can have a working note for that as well. Calculation of amount received on final call. Calculation of amount received on final call. Amount received on final call. So final call money due. This is I'm doing for all the shares. Okay, for all the shares we're doing 75,000 into rupees 6. 4,50,000. No, 4,50,000. Excess of application adjusted. That we did above only, we did here only in the journal only, we did 2,25,000 extra was there on 25,000 shares. Out of the 3 lakh applications, 2 lakh was rejected, 1 lakh was kept. In that 75,000 shares only, we are allotting. So 25,000 shares ka extra money was there. So that is 2,25,000. 25,000 into 9 rupees. So that was adjusted with call, 2,25,000. Therefore, amount receivable on final call is 2,25,000. In this, Raj is not paying. Raj is not paying is 3,375. He had to pay. This is from Raj. He had to pay this 3,375. Raj is defaulting. You can write over here, not paid by him. So this we will minus. So we have received 2,21,625. Total 2,25,000 was to be received. In that, one person did not pay. Raj did not pay. So Raj did not pay. Should I calculate directly 1,125 into 6 rupees? Should I do? I get 6,750. So Raj did not pay 6,750. No, that is wrong. Raj has already paid some money. That extra money, what he had paid at application, right, has been adjusted against final call. This working note. Calculation of excess adjusted against final call. So that money has already, we have already adjusted some money against final call. So 221625 is what we have received right now. So you can open the calls in Arrears account for that 3375 of Raj, or you can just keep it simply. So if you had opened calls in advance for this one, right? Here calls in advance will be debited. 2,25,000 we would debit calls in advance, but we did not open it. Bank account debit to equity share, first and final call. We are not opening the calls in Arrears account. If you open the calls in Arrears account, then we will have to debit the call scenarios with 3375 and credit equity share first and final call with 2,25,000. So we've kept that equity share first and final call account open. Okay, now we can go ahead to forfeit the shares. This is working note 3. Forfeit Raj's shares, equity share capital account debit, equity share capital account debit, fully called up share, rupees 10 into how many shares are we cancelling? We're not cancelling 1,500 shares. Remember, 1,500 shares is what he had applied for. He had applied for 1,500 shares. Have we given him 1,500 shares? The answer is no. We have given him only 1,125 shares. 11,250. Security premium. Is there any security premium not received? No. Security premium was collected at the first stage, application and allotment. He has paid all of it. So security premium reversal will not be there because we have received the money. Only when security premium is not received, we reverse it. But here security premium has been received. So no point of reversal. 2. we will have to write equity share first and final call. How much money he had not paid? He had not paid 3375. He had not paid 3375. So that will be credited to equity share first and final call. 2. Forfeited share account. You can calculate how much he has already paid. So towards the face value, or you can just write the balancing figure over here. The balancing figure is 3375. Or I'll also tell you how I got the 7875. There's one more way of calculating it, which also I will tell you. So let's do that. See, how much did Raj pay totally? How much did Raj pay totally? Raj had paid 13,500, right? When he applied for the shares, 1,500 into, he had paid 9 rupee per share. So 13,500 rupees Raj had paid. So we don't book everything as forfeited shares account. We don't credit everything. 13,500 he paid. We don't credit everything. We exclude the premium amount. So the premium amount is 1125 into 5 rupees, 5625. So in 13,500 minus 5525. So you get 7875, 5525, right? 5 into 1125, 5625. So 5625 you're supposed to exclude. I'll repeat what I'm doing. So here what we credit to the forfeited shares account is the face value received. This is what we credit. Okay, this is the logic. We credit what? The face value received on these shares, on Raj's shares, whatever face value I have received, that is to be credited to the forfeited shares account. Now, Raj has paid totally only one stage money he had paid, which was that stage, the application money received from Raj, that only one stage, first stage. 9 rupees he had paid on 1,500. 13,500 rupees he had paid. Correct? No. See, calculation of face value received. This also I will teach. Listen. So face value received will be Raj paid application and allotment money $13,500. In this, security premium was included. Security premium on his 1125 shares was included, which we have transferred to security premium. So that is towards security premium 1125 into 5 rupees. 5625. So the remaining, everything was adjusted towards the face value 7875. This is towards face value. That's all. You don't have to do this, but I just told you the logic, how I got that 7875. So here 7875 is towards the face value. You can write this as the balancing figure also. This is the face value received from Mr. Raj. 7875. Per share also you can calculate. So 7875 is the total amount received. Here only you can calculate. Per share will be 7875 divided by 1125. This is the gross gain per share. 1125 shares we had issued to him. No, so 7875 divided by 1125. How much do you get? 7 rupees per share. This is the gross gain per share, 7 rupees. This is this is how you calculate it. I hope you're clear. So you have to calculate how much is the face value received from that person when there's pro rata allotment. So you have to exclude the security premium, calculate the face value received from that person, and then divide it by the number of shares allotted to him, and you will get the face value per share. Now we are reissuing. In this question, you don't have to do this working note because they're reissuing all the shares. So you can do your PUC technique, you can follow. The forfeited shares were reissued at a discount of 4 per share. So we will reissue all the shares. bank account debit. We had received a premium on 1,500 shares, but I'm not issuing him 1,500, right? So in this 13,500, I am using only for 1,125 shares. I am issuing the shares. So to security premium account, I transfer only this much, Adil, only relating to 1,125 shares. Remaining that out of 13,500 or rather 1,500 minus 1,125, 375 shares ka application money, whatever he paid 9 rupees, that I did not appropriate against capital or towards premium. No, I used it for first and final call. So there is no premium. I hope you're getting this. This was for 1,500 shares he had applied, but 375 ka shares I did not give him only. So there's no point of appropriating premium for those 375 shares. So only 1,125 shares ka premium was considered. The remaining, whatever extra he had paid, that was all adjusted against final call. So bank account debit 1,125. And how much discount have we issued? 4 rupee discount. So 1,125 into 6. It's a 10 rupee share. 6,750. Forfeited shares account. $4,500. To equity share capital. $11,250. Fully paid shares. 11,250. Now, next one, you can directly transfer it. Whatever the balancing figure, I can follow my PUC technique. 7,875 I had credited here. I have debited 4,500. So forfeited shares account debit 7,875 minus 4,500, 3,375. Sir, can you follow our technique also here? Everything was reissued. 1,125 shares were also reissued. So this is possible over here. But the CA technique, like if it is not 1,125, how to calculate? See, we have already calculated 7 rupees was the face value received per share. This was the forfeiture gain per share. In that, we gave a discount of 4 rupees. So 4 into 1,125. So discount of 7. So the net gain was, gross gain was 7. This was the forfeiture gain, gross gain of forfeiture gain. 7. Reissue discount was 4. 4, right? How did I get 7? I had calculated here, working note. Per share, face value per share, whatever we had received. That was the gain. So 3 rupees is the net gain. Multiply this with number of shares, 1,125. You should get the same answer, 3,375. To capital reserve. But you can actually follow your PUC technique over here. It's simpler. It's a shortcut. Reserve 3,375. You should know both. Good question, this one. It's come once in the exams. It's not there anywhere in the institute's database. This question. It was there once in the exam question paper during the COVID times. I think it was 2020 January attempt. Very long question. Like the working notes will take some time and you have to apply your mind a little bit for this. If you have understood, good. If you have not understood, rewatch it later. The live I mean, the video will be available, right? So you try this again, watch this again, and see how we did it. Okay. Anything? Any doubts? Any questions? You should be good with basics to do questions like this. Any questions? Any doubts? Okay. Right. So this was company accounts, issue of shares, issue of debentures we did in the morning session. Uh, Issue of shares is this much. We've done some good questions. All three questions were very good, especially the third one was the best question you have in issue of shares. And the latest exam question also you can have a look. That's easier than this. It's not difficult. Uh, it's similar to the second question we did. Second and first question, a little bit combination that was. That's it. If you have attended my crash course, you've done it there. So that question also is solved. Okay, so that is all about our issue of shares. If there's anything else, you can ask me. Any question? Anything else? You can take a breather, take a small break, 2 minutes, 3 minutes break you take, and after the break, I will start with a new chapter. Okay, we will restart. We'll do one question from depreciation, which is important. Change in method of depreciation, uh, which can come for 10 marks for your exams. Let's do a question. Mrs. Roxy purchased a brand new machinery on 1st January 2017 for 3,20,000 and also incurred rupees 80,000 on its installation. Another machinery was purchased on 1st July 2017 for 1,60,000. On 1st July 2019, the machinery purchased on 1st January 2017 was sold for 2,50,000. Another machine was purchased and installed on 30th September 2019 for 60,000. So many machines. Another machinery, okay, that's done. Under existing practice, the company provides for depreciation at 10% per annum on the original cost. What method is that? 10% per annum on the original cost, straight line. However, from the year 2020, it decided to adopt WDB method and charge the depreciation at 15% per annum. You are required to show the machinery account for the years 2019 and 2020. Makes the question very interesting. So only 2 years का machinery account they have asked us to do, considering the books of accounts are closed on 31st of December every year. Okay. You don't have to start from 1st January 2017. 1st January 2017, you don't have to start from there. You just have to start from 1st January 2019. So on 1st January 2017, you have to see what is the book value of the machineries because we already had some machineries on 2019. Uh, Only for 2 years they've asked, no, 2019 and 20. Sir, I will do from 2017. No, that's not correct. You have to do it as a working note. If you want to do it as a working note, calculate the book value, you can do it. You can do the account and the working note. But the answer should contain only 2 years ka machinery account, 2019 and 2020. We don't need the account from 2017, remember. So don't do it as part of the answer. If you want, you can do it as a working note, 2017 and 18 ka machinery account you can do. But my advice is instead of doing that working note, ledger account as working note, do the calculation. How many machines do we have as on beginning of 2019? How many machines will we have? See, there's this machine which was purchased on 1st January 2017 and installation was there on that. Another machine was purchased on 1st July 2017. So this was 1,60,000. This is also there. Then it is about 1st July 2019. This anyway, we will do the accounting. We will write it in our ledger account. Only the book value of these two machines, which was purchased in 17, we have to calculate. So that we will do. And then we will do the account for 19 and 20. Okay. So let's start with the working notes. I'll do the working notes first. Calculation of book value of machines. As on 1/1 2019. So we have two machines. One machine was purchased on 1/1/17. The other one was purchased on 1/7/17, right? Yeah, 1/7/17. Historical cost, cost of the asset. So 2017 cost of the asset was 3,20,000 plus 80,000, which is 4 lakhs. And 1717, what we had purchased was for 1,60,000. Depreciation for 2017. The first machine would have been used for the whole, we can call this as M1. This is M2. The first machine was used for the whole year, right? So charge for the whole year, WD, we are following original cost method, historical straight line method, 10%. In 2017, 18, 19, for those many years, you do the straight line method. And for 20, you follow the WDV. It will be 40,000. This was not used for the whole year. So 1,60,000 into 10% into 6 by 12. For 6 months, we used it. So 8,000. So book value at the beginning of 2018 would have been 3,60,000 and 1,52,000. Again, for 2018 also, I will charge depreciation over here only because I want the book value as on 1/1/2019. Original cost, on the original cost only I'm going to charge. So 40,000, and this will be on 1,60,000 for the whole year. 16,000. So the book value on 1/1/19. This is what I wanted. 3,20,000 and 1,52,000 minus 3,000, 1,36,000. Fine, done. That's done. Now let's do the ledger account, machinery account. Okay. To balance brought down 1/1/19. So we have two machines. M1 ka balance is 3,20,000. I think this is important because when we sell it, it becomes easier for us to calculate the profit or loss. You can save time. That's why we write in the brackets 3,20,000 and M2 1,36,000. The total will be 4,56,000. This is the opening balance in the machinery. Now see in 2019, what are they doing? On 1st July 2019, the machinery purchased on 1st January 2017 was sold. That's M1. M1 is being sold on 1st July 2019. So whenever you're selling a machine, we have to do three things. Totally, three things will have to be done. The first one is you have to charge depreciation for the year if you've used it during this current year. We've used it, right? 6 months we've used it. 1st July we are selling it. Second, you have to pass the bank entry. Third one, profit or loss calculation. So let's do the three things. By depreciation, this is on only M1. You're following the straight line method. 4 lakh into 10% into 6 by 12. $20,000. In 2019, we're still following the straight line method itself. 20,000. Next, by bank account. How much money are we getting by selling the asset? 2,50,000. Next, we have to calculate the profit or loss. So see this. What was the opening book value of M1? It was 3,20,000. The value of M1 was 3,20,000 in the books. Opening book value of the asset. In that, we have charged a depreciation for this year 20,000. So the current value on the date of sale, it is 3 lakhs. And we are selling it for 2,50,000. So there is a loss. You can do a working note for this, or you can just do it there only. By loss on sale, it's profit or loss is equal to sale value minus book value. So the sale value is 2,50,000. The book value of the asset, as per our accounting records, the book value was, it was 3,20,000 at the beginning of the current year. 3,20,000 at the beginning of the current year. We just charged depreciation of 20,000 for the current year. So 3 lakh it is. 50,000, you get loss. So if it is loss, then you'll write over here by loss on sale 50,000. You could write it over here only 2,50,000 minus in brackets 3,20,000 was the opening book value, 20,000 was current year's depreciation. So 3 lakh is the book value on the date of sale. 50,000 is the loss. Another machinery was purchased and installed on 30th September 2019 for 60,000. This was on what date? 30th September 2009. $60,000 over, done. That's it. Loss on sale done, profit done, nothing else. Now, under existing practice, the company provides for depreciation at 10% per annum original cost 2020. Next year, we have to follow the WDV method. Now, calculate the balance. Before that, we have to charge the depreciation for the end of the year, right? So 31/12/2019. We have two assets. One is that M2 out of the earlier two assets, one has been sold, M1 is sold. So we have M2 with us, and the other asset is the one which we purchased now, M3. So charge depreciation on both of those assets. M2 original cost, we're still following original cost in this year as well. 1,60,000 into 10%. 16,000. M3 60,000 into 10% into 3 by 12. We have used it only for 3 months, October, November, and December. 1,500. 17,500 is my total depreciation. As I'm not selling any of the machines in the next year, am I selling any machine in the next year? Not selling. So I don't have to calculate separately. What is the book value of M2? What is the book value of M3? I'm not going to calculate. I can directly write the balancing figure. Only if I was selling anything, I will calculate it separately. Otherwise, it's not required. 5,16,000. 1,78,500. It could be calculated separately as well. It's 136 minus 16,000. 1,20,000 is the value of M2, and 60,000 minus 1,500. 58,500 is the value of M3. So you can do it separately as well, but not required. No other transaction in this year. I just have to change the method of depreciation. I will have to follow WDB for this year. So directly calculate on this return on value by depreciation on 31/12/2020. 1,78,500 into 15%. 26,775. Write the balance over. That's it. Done, no? Yes. One more that small 5 mark questions are asked from here that we will look at the IC material and I'll tell you how to do it. All this is easy. Please do all of these questions. Even if you don't, if you remember something that you've done from the past, it's enough. You don't have to sit and do those questions. Very simple. Sum of years that its method, production and its method and all. Provision for depreciation can be is important. So if you know the journal entries and all, if you have attended my classes, you've done all of this in detail. You can just have a look at the journal entries and how the exams are prepared. I was talking about this illustration 11, small 5 mark question. We can quickly discuss this. A machine costing 6 lakh is depreciated on straight line basis. What they do is revising the useful life, revising the book value, so that of how to do it. A machine costing 6 lakh is depreciated on straight line basis, assuming 10 years working life and nil residual value for 3 years. The estimate of remaining useful life after third year was reassessed at 5 years. Okay, so what we have to do is see, originally the cost was 6 lakh and they assumed that the useful life is 10 years, with scrap value being zero. So how much depreciation were they charging? 6 lakh minus zero, scrap value is zero, straight line method, right? You know the formula for straight line method. Historical cost minus scrap value divided by useful life. So historical cost is 6 lakh, there's no scrap value divided by useful life, 10 years. So they were charging depreciation at 60,000 rupees. You get 60,000 rupees. They were charging depreciation at 60,000 rupees. How many years did this do like that? They stuck with that estimate for 3 years. So they have charged total depreciation of 60,000 into 3 years. 1,80,000. 1,80,000. The opening value was 6 lakh. The cost was 6 lakh. They have totally charged 1,80,000 book value. Depreciation. So the book value was 4,20,000. That is the book value after 3 years. Now here they are changing the estimate. They are changing the estimate to 5 years. So this 4,20,000, whatever you got remaining book value divided by 5 years. 84,000 is the new depreciation. So this is it. Just read it, you'll understand. Depreciation per year is originally it was 60,000, 6 lakh divided by 10 years. They were charging SLM method. So for 3 years, they charged 60,000, 60,000, 60,000, 1,80,000 total depreciation they charged. So the book value just before the change, before they decided to change the useful life, the book value was 60,000, 6 lakh minus 60,000 into 3, which is 4,20,000. So 4,20,000, and they changed the previous estimate is not required. You don't have to write that sentence. You can directly go for remaining useful life. So remaining useful life is 5 years. 4,20,000 divided by 5, 84,000 is the new depreciation. Very simple. Similar question is this: when they change the value also, if they are changing the value of the asset also, how to do it? So a machine of cost 12 lakh is depreciated straight line method, assuming 10 years working life and zero residual value for 3 years. At the end of the third year, the machine was revalued upwards by 60,000 and the remaining useful life was reassessed at 9 years. So here it's a similar question, but along with reassessing the useful life, they are also revising the value of the asset. They are revaluing the asset. So both ways it will change a little. So we will do the calculation. First, what is the cost of the asset? 12 lakh. 12 lakh is the cost of the asset. Divided by how many years did they assume? 10 years working life. So 1,20,000 is the depreciation per year. How many years did they follow this assumption? They followed this assumption for 3 years, right? So 3 years they followed. So into 3. So total depreciation so far 3,60,000. So you calculate the book value. 12 lakh was the original cost. In that already 3,60,000 depreciation they charged. So 8,40,000 is the remaining value. Now to this they are adding 60,000. The machine was revalued upwards by 60,000. So they are increasing the value by 60,000. So add that 60,000 to this 8,40,000. Existing value in the books is 840. They added another 60,000. So the value right now is 9 lakh. And what is the new useful life? 9 years. So divided by 9. you will get 1 lakh as the depreciation for the next years. I hope everyone has followed this. One more question that I get as a doubt is that revaluation reserve. I will discuss that also. This practice question 5. Yes, practice question 5. I will just finish this one. Yes, that is provision for depreciation. You should be comfortable with provision for depreciation for that question. Practice question 1. I'll discuss if you want very briefly, but you should be comfortable with the provision concept. I don't think I have enough time to discuss that in detail, but I'll try. Okay, now this one is again a small 5-mark question, which is never asked, but which could be asked for your attempt about the revaluation reserve. I'll tell you how it works. Listen to the concept quickly. It's very easy. You can read and you can only understand it. But I will just tell you what it is. People who have not read this question at all will find it hard in the last few moments. So let's, and it is doable. I can solve it. 5 minutes, I can tell you the concept and we can finish it. So whenever you're increasing the value of the machine, right, or any asset, so what we do is that gain on revaluation is not credited to P&L account, it is kept aside in an account known as a revaluation reserve account. So it is a gain account. Revaluation reserve is maintained for the gain, whatever the revaluation gain we have made, the profit on revaluation, if you're increasing the value of the asset. So we credit the revaluation reserve account. And then the revaluation reserve is used only to reduce the value of the asset. In the future, if any asset's value is reducing and you're revaluing downwards any asset in the future, so that time the revaluation reserve is used. You should first give importance to this reserve, prioritize this reserve, and then you debit the P&L account, book that as a loss in the P&L. So read this question, question number 5. Amazing Group had property, plant and equipment with a book value of 35 lakhs on 31st December 2019. The balance in revaluation surplus, that's revaluation reserve, was already there at 3 lakh rupees. As part of their practice of revaluing the assets on yearly basis, another revaluation was carried out on 31st December 2019. Evaluate the impact of revaluation if the fair value as a result of revaluation done on 31st December 2019 was 37 lakhs, 33 lakhs, 31 lakhs. Also give the journal entries. Fine. So what is case 1? Case 1 is they're revaluing the asset to 37 lakhs. What is the value right now? The value is 35 lakhs. So they're increasing the value even more. So they are making it 37 lakhs. So what we will have to do? We will have to debit the PPE account, property, plant and equipment account, to the revaluation surplus. 2 lakh rupees is gain again. So that is credited to the revaluation reserve account. So PPE account debit to revaluation reserve. 2 lakhs, 2 lakhs. In case A, I hope everyone is understanding. Case A is they're increasing the value to 37 lakhs. So 2 lakhs will be debited to the asset account, the PPE account, and will also credit the revaluation reserve with 2 lakhs. Case B, if you're valuing it at 33 lakhs, so this is downward now, right? So 35 lakhs was the value earlier. They're downward revaluing it to 33 lakhs. So how much reduction in value of the asset? We are reducing it by 2 lakh rupees. So 35 lakh, 33 lakh matta hai there. So we are reducing it by 2 lakhs. Now this reduction, it's a loss for us. We have to credit the property, plant and equipment account. We have to reduce the value of the asset. So PPA account will be credited with 2 lakhs. Which account to debit? See, generally we would debit the P&L account, it's a loss. So we will debit the P&L account. But if there is evaluation reserve, we will debit the revaluation reserve. Here there is revaluation reserve and it is 3 lakhs. So I have to debit it with 2 lakhs. I will debit it with 2 lakhs. So revaluation surplus account or reserve account debit 2 lakhs to PPA account 2 lakhs. This is the answer for case B. Case C, you're reducing the value by 4 lakh in case C. 35 lakh is the 31 lakh ಮಾಡಬೇಕು 4 lakh. So now I can't debit full 4 lakh to revaluation reserve because revaluation reserve balance is how much? How much is the balance in revaluation reserve? It's only 3 lakhs. So I will debit 3 lakhs to the revaluation reserve account or the revaluation surplus account. I will debit it with 3 lakhs and remaining 1 lakh I will debit to profit and loss account and to PPE account 4 lakhs. I have to reduce it by 4 lakhs, right? PPE account will be credited with 4 lakh to the reserve available, revaluation reserve available. To that extent, I will debit the reserve account, so 3 lakhs. And to the extent it is not available, 1 lakh, we need even more. There's a loss of 4 lakhs. And I have a revaluation reserve of only 3 lakhs. So the remaining 1 lakh will be debited to the P&L account. So let's look at the journal entries once. Question number 5. Okay, they have given very nice detailed answer. If you read it, you will also understand it. Fair value 37 lakhs in the first case. In case A, it was 37 lakhs. Since this is an upward evaluation and the group had a balance in evaluation surplus, hence this will result in an additional credit of 2 lakh to the revaluation surplus, and hence the total revaluation surplus balance shall increase to 5 lakhs. So already 3 lakh was there. We are adding another 2 lakhs to it. So it will become 5 lakhs. This is what they have said. The accounting journal entry will be PP account debit by increasing the value of the asset to revaluation surplus 2 lakhs. Next, when the fair value becomes 33 lakhs, here we are reducing it by 2 lakhs. See how they have given the answer. Since this is a downward revaluation and the group had a balance in revaluation surplus, that is, there was an upward movement earlier. Hence, this will result in reduction or a debit to the revaluation surplus to the extent of the balance therein. And any excess shall be debited to P&L account. So there was already 3 lakh rupees. So to the extent of 3 lakh rupees, we can debit the revaluation reserve. If it is more than 3 lakh rupees, the downward revaluation, then we will debit the P&L account. But in this case, it's not like that. And hence the entire amount should be debited to revaluation surplus. There is a reduction in fair value by only 2 lakhs. So we debit the revaluation surplus itself. Hence the total revaluation surplus balance, part of other comprehensive income, shall decrease to 1 lakh. The accounting journal entry will be revaluation surplus to property, plant, and equipment. So should we write all of these sentences? Yes. If they ask you to explain the treatment, then you have to write it. If they ask you only the journal entry, then you can just write the journal entry. Don't by heart it. Just understand what they are saying. It's very simple. Don't by heart these paragraphs, you know. So they're just saying that there is already the balance, revaluation surplus balance is there, 3 lakh. So if there is a downward revaluation, we will debit the revaluation reserve. And here it is 2 lakhs you're debiting, so the balance will come down to 1 lakh. The same story they have said in sentences, that's all. Then if it is being revalued to 31 lakhs, so we are decreasing it by 4 lakhs, right? So in that case, since this is also a downward revaluation and the group had a balance in revaluation surplus, there was an upward movement earlier. Same copy paste, you can see. Hence, this will result in a reduction or a same thing. So 4 lakh we will debit. And hence the revaluation surplus will be debited by 3 lakh and the balance 1 lakh will be debited to the P&L account. Hence, the total revaluation surplus balance shall become nil. The accounting journal entry will be this: revaluation surplus account debit 3 lakhs, P&L account debit 1 lakh, to property, plant, and equipment 4 lakhs. Okay, fine. Someone asked the first question. I'll try to explain it. Listen, very unlikely to come for the exam because it's too big for depreciation. Depreciation does not have a weightage of 20 marks. This is a 20-mark question. So it's very unlikely to come for the exams, but I'll just go through the question marks. I mean, upper say I'm explaining. Only if you're comfortable with provision for depreciation, you'll be able to understand my discussion. A firm's plant and machinery account at 31st December 2018 and the corresponding depreciation provision account broken down by year of purchase are as follows. So we have these machines, okay? So there is like 6 machines and the depreciation provided so far on these machines. So the cost is given, 2002 cost is 2 lakh. We had purchased some machines in 2002, which is costing 2 lakhs. The depreciation provision That means the depreciation till date. Depreciation provision means depreciation provided till date is 2 lakhs. So it's fully depreciated. The book value is zero. 2008 ka machine, you see 3 lakh was the cost of the machine. That is also fully depreciated, 3 lakh. 2009 ka you see 10 lakh was the cost. It is depreciated to the extent of 9 lakh 50,000. So there is big book value, 50,000 is there. Then you have 2010 ka machine, 7 lakh, 5 lakh 95,000. 17 ka machine, 5 lakh, 75,000 is the depreciation till date. And 2018 ka machine, 3 lakh and 15,000 is the amount of depreciation. So total cost of all the machines I have totally 6 years ka purchased machines. 6 years may we have purchased machines. And the total of all the machines, the cost of all the machines put together is 30 lakhs. And the depreciation put together of all the machines is 21 lakh 35,000 rupees. Okay, you understood the table. I have told you what the table is. 30 lakhs is the cost of all the machines put together, and the depreciation on all the machines is 21 lakh 35,000 till today. Till today, that is the depreciation. Till 31st December 2018. Depreciation is at the rate of 10% per annum on cost. It is the company's policy to assume that all the purchases, sales, or disposal of plant occurred on 30th June in the relevant year. So they assume that every sale, every purchase that happens during a year is happening on 30th June only. That is mid-year, between the year, 6 months into the year. They assume that all the purchases, all the sales, all the disposals, every transaction relating to the asset happens on 30th June. That's their assumption. For the purpose of calculating depreciation, irrespective of the precise date on which these events occur. So it doesn't matter when that event is actually happening, when you're actually selling, when you're actually purchasing, it does not matter to them. So they assume that it is happening on 30th June. That's what we understand from the sentence so far. Now, during 2019, in this current year, let's see what and all happened. The following transactions took place. Purchase of plant and machinery amounted to 15 lakhs. So when do we assume that it was purchased? 30th June 2019. Plant that had been bought in 2008 for 1,70,000 was scrapped. So 1,70,000 ka asset which was purchased in 2008. 3 lakh ka asset was there, that 1,70,000. The asset has been sold now, scrapped. Scrapped means zero, disposed. It was thrown out. It was useless, so no money was received there. It was given for free. Plant that had been bought in 2009 for 90,000 was sold for 5,000. Plant that had been bought in 2010 for 2,40,000 was sold for 15,000. Okay. So there is one purchase, and then there are 3 years ka different assets were sold. So let's see what to do. You are required to calculate the provision for depreciation of plant and machinery for the year ended 31st December 2019. In calculating this provision, you should bear in mind that it is company's policy to show any profit or loss on sale or disposal of the plant as a completely separate item in the P&L account. So basically, we have to show it separately. That is simple. That we do anyway. You are also required to prepare the following ledger accounts during the year 2019. Plant and machinery accounted cost, depreciation provision, sales or disposal of the plant and machinery. Okay, I will do this. See, it's not difficult. It's simple. It's easy. So let's do it. They have asked us for some ledgers. I'll do the ledgers. Three ledgers they have asked me to do. Okay. First, they have asked us to do the machine account, plant and machinery account at cost. Right? The machinery account. So what was the opening balance of all the machines put together on 1119? The total. You have to look at the total. It was 30 lakhs. Next, provision account. It will have credit balance. It is depreciation till date 1119. What was the total provision? 21 lakh 35,000. Okay. So it was 21 lakh 35,000. Clear or no? Next. Now see what they have told. Now we are going to write the disposal, about the sale, about the purchases we have to write. Purchase of plant and machinery amounted to 15 lakhs. So this is to be written in the plant and machinery account. Go to the plant and machinery account and write this to bank account. What is the date we're going to write? You don't have to write the dates, but they are assuming that all the purchases was made on 36 2019. So it will be how much? What is the value? 15 lakhs. Is it? 15 lakhs. In the machinery account, not provision account, in the machinery account to bank. 15 lakhs. That's it. Then about the sale. Now, when you're selling it off, you will have to do the disposal account. The asset disposal or the plant and machinery disposal account we will have to do. So how does this work is this disposal account, whatever we have to create it by debiting the cost of the asset that you're disposing means selling or scrapping or whatever. So you have to debit the cost from the plant account, whatever the plant and machinery account is there. From there, you have to debit the cost and the depreciation till date on those assets, whichever you're selling, right? You have to credit it over here in the disposal account itself. You credit. So look at the question. Plant that had been bought in 2008 for 1,70,000. So in 2008, we had bought it for 1,70,000. It seems that's the cost. So we are selling it off. So from here we have to credit. We have to. This is at cost, right? So this asset is being sold or scrapped. So this will go to the disposal account. Plant and machinery disposal account. Are you all understanding? Are you all with me? 36 2019. 1,70,000. So that will be debited over here. to plant and machinery account. So this was scrapped, right? So 1,70,000. You can write the directly out the column. This, or you can write this in brackets. This was scrapped. 2008 ka this was the cost of that machine which is being scrapped. I have debited to the disposal account. We are ready to sell it, or we are ready to dispose it. So the cost has been transferred there. Now also look at the depreciation on this asset. On this particular asset, how much depreciation have I charged? You have to see till a date. So for 2008 asset, which was purchased in 2008, this asset was purchased in 2008. It's fully depreciated. So everything is depreciated. So transfer the full 1,76,000 from here. From provision, you're transferring everything, 1,76,000 also. Instead of me calculating, I'll just show you. It'll take a lot of time if I sit and calculate. I'll just show you what they have done, the solution. See here. Though we have already finished plant and machinery account at cost, this was 30 lakhs. This bank account is 15 lakhs, which was purchased. Then disposal, we had to transfer to disposal, right? So scrap this, it was 1,70,000. This was transferred to the disposal account over here, 1,70,000. And the depreciation also has to be transferred. So the depreciation will be transferred from the depreciation provision account, provision for depreciation account. So 1,70,000. It is a fully depreciated asset. So 1,70,000 was transferred to the provision account, 1,70,000. Then for the sold assets, 2009 ka purchased asset we had sold. No, take your calculator and calculate from 2009, because it was not fully depreciated. So we have to calculate how much is the depreciation on that asset. So 90,000 in 2009, we charged half for half year. So 5% we charged, because for the year of purchase, they charge for half year. So 5% we charged. Then for 2010, we charged full 9,000 we charged. So 9,000, 2010, 11, 12, 13, 14, 15, 16, 17, 18. For 9 years, you've been charging the whole depreciation. So 9 into 9,000, right? 9 into 9,000, 81,000. Plus for the first year, 4,500. For this year also, 4,500. So total depreciation will be 90,000, which will be charged. So for the year of purchase, you will charge half year. So 4,500 for 2009, for 2010, for 2011, for 2012, for 2013, for 2014, for 2015, 16, 17, and 18. So 9 years you will charge for the whole year, which is 9,000 per year. 90,000 is the cost of the asset into 10%, 9,000 per year into 9, 81,000. Plus this year's is 4,500. So 90,000 is the depreciation on that asset. Transfer it to the disposal account. For 2010 also, you have to calculate how much is the depreciation till date. So again, same calculation over there also. 2010, we had purchased it for 2,40,000. So for the first year, you would have charged for half year, because you assume for 6 months you have used it, right? So 12,000 for the first year. Then 2011, 12, 13, 14, 15, 16, 17, 18. For 8 years, you have charged full 24,000 into 8 plus 12,000 for the first year plus 12,000 for the current year. So 2,16,000 will be the depreciation for that other asset. 2,16,000. Transfer this to the provision account. From the provision account, transfer it to the disposal account, the total. This is how you do it. Then the sale entry and all is done in the disposal account itself. You have to pass the sale entry and stuff. The profit or loss, the balancing figure in the disposal account is the profit or loss. Just these two things you have to be careful. The cost is transferred from the plant and machinery account to the disposal account. The cost is to be transferred. Whatever you're selling, those assets ka total cost, that is to be transferred over here. The depreciation till date, you have to transfer from the depreciation provision account to this account, to the disposal account you have to credit. And then you have to pass the sale entry. Then the balancing figure is profit or loss. Disposal account gets closed there. Then the depreciation calculation for the current year you will have to do. So that is done over here. They have done through the working note. You can just go through it. It's very simple. For 2010 asset, you have to charge for half year. 2002, 2008, 2009 will be fully depreciated this year. So you just have to do it for the other assets. You have to look at the cost, multiply it with the rate into half. So you have to keep doing it for the assets which are sold. Which if it is not sold for the full 10% also you have to do. For 2017 full 5 lakh into 10%, 2018 3 lakh into 10% you do. For 2010 you have to just take care of that asset which is being sold. You have to minus it and you have to do. You can try this on your own. It's easy. If you don't understand something, ask. I did the disposal account. The disposal account I explained. This depreciation calculation also you can do. You have to just calculate the depreciation for the current year through that uh, table. It's very unlikely to come for the exams because it's too lengthy. But do it once, do it. If you're finished the provision for depreciation account and all, don't take a risk. Do 100%. Do that, cover that question also. So it's a little longer question. Someone had asked me to explain it. I've explained it very briefly. I hope you have understood it. Yes. Anything else from depreciation? Just do the sum of years digits method once. The formula you apply it and you do. Property plant have this one. The production unit method, machine hours method never asked in the exam so far, but just do it. What is very important is change in method of depreciation. And there's one more question I want you to try, which has been done before if you had attended my crash course and stuff, which is very important and interesting also. I'll show that question once. Okay. Just give me a second. Yes, this one. Try this question. Possible, I'll solve it in the evening. But if you have attended my classes before, I have done this question multiple times, I guess. So this question, take a screenshot and try it. This is also a good question. 10 marks question. Can you see the screen? Okay, this one, this one. Yes, 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 yes. This question, okay? Try this question. This is a good question. I hope you can see the screen. Take a screenshot and keep and see the working notes and all. Okay. Inventory, I'll do it in the evening session. We have a lot left for the evening session, but we will do it there. Okay, we will take our lunch break and in the evening we will meet again.